The most common questions I get asked every day is the differences and pros and cons between day trading, swing trading, and investing. In today's video, we're going to go through all of that. My name is Michael Nauss. I'm a chartered market technician and trader. So when you're picking your time frame for your trading career, what is the most important thing? So if I could sum it up in a single word, it would just be frequency, right? We know that there is a spectrum between day trading and super long-term Warren Buffett style investing. Now, somewhere on that spectrum is going to be the best for your time frame, for what you have going on in your life, your account size. So we're going to try to narrow that down today. So if we start on the far side, we start on the Warren Buffett style of investing. The main benefits here is that there's fewer emotions when it comes to it. They're pretty constant because you're not watching it every day. You're not watching every tick. You're not going through every single tick on every single trade in the entire market. It gives you time to make decisions. You don't have to make them emotionally on the fly. There's also lower transaction fees, and don't get fooled by zero commission brokers because they're still taking fees from you. That can be a topic, I guess, for another video. If you're interested in that, give this a like and share it about. And the main thing is less time required. So if you are already busy, this might be something that you look into as well. So what are the downsides? Why doesn't everyone just invest, and why do they try to trade? Well, there's fewer chances to compound, right? Even Warren Buffett said compounding is the eighth wonder of the world, where if you take a trade and that grows your account, you have more capital to take the next trade, and so on and so forth. So the more opportunity you have to compound, the quicker you can experience account growth. Also, this means it's fewer chances to test a trading style. If you have a trading style and that trade takes 6 months to a year to develop, it then becomes harder to say, okay, was that a good trade that just didn't work out, or is there something wrong with my investment style as a whole? The feedback loop from trading to profit or loss, that is looser, right? So it takes longer to get that. What's the problem with that? Well, if you're doing something wrong, it's best to get a bunch of reps under your belt quickly so you know you're doing it wrong and you can move on to the next thing. Bigger gains also mean bigger losses, right? When you're holding for a longer period of time, hopefully you're buying something and you're hoping to get, a 50 or 100 or whatever percent return over many, many years in that instrument. But it also means that you have to risk 10, 20, 30, 40% on that investment because the swings are bigger. You're using a longer time frame. Therefore, if you're using really, really tight stops and looking for these massive home runs, it's going to chop you out way more frequently. So you have to loosen up both sides of the equations. So now if we go to the other side here of the spectrum into day trading, it's essentially the opposite to all this. So day trading is super emotional. You have to ingest data. You have to make a decision. You have to take an action on the fly. Problem with doing that is when you're constantly under barrage of data and emotions and all of these things, it can burn out. It can lead to poor decision making. It can lead to poor trading. You're getting the other side of that when it comes to that con. And there's a lot of fees. Again, don't believe zero commission brokers. They're still making money off you. It's just part of the spread now. So you're paying way more money when it comes to your trading than if you're investing, where you just buy a stock once and you hold it for about a year. And the amount of time you need to devote is way longer, and there's periods of time throughout the day where you have to be absolutely laser focused. When it comes to investing, you can go through your charts on the weekend. You can be doing it while having a beer or watching Netflix or something like this, where you're able to kind of look at what you're doing but do something else. If you are day trading your account, you need to be absolutely laser focused exactly what you're doing for the time you're taking trades. You can't be letting in all kinds of different other sources of information. Believe me, it will hurt you in the long run. But the pros are the opposite from day trading. You can compound winners quickly. You take a trade, you make a percent or two in it, you get out, you have that to now take another trade the next day or even later that day. Also means you can compound losers quickly, of course. You will have lots of reps to learn a trading style. If you're trading gaps, every day there's going to be new 5 or 6 stocks that are gapping. So you have a lot more time when it comes to these things to be able to learn to make sure that you're trading in a correct way and that you're able to iterate on your trading style much quicker than an investing style. And there's lots of small gains and small losses. Hopefully the small gains are larger than the small losses, but just the fact that you can keep your risk insanely tight and you can just stop at any point. You're not buying something, right, with a 20, 30% stop and then leaving it for 6 months. You can get in, and if some piece of information changes, you can immediately get back out. So swing trading is right in the middle, and this is more or less what I like to do. It's the thing that works for me and everything I've got going on in my life the best. Swing trading, generally the whole time will be anywhere from 3 days to 3 weeks to 3 months, right? Not a super long-term investment, but generally speaking, a few days to a few weeks is how most people classify swing trading. The best part of this is you don't need that absolute laser focus, especially with a product like Trade Ideas or something like that, where you can scan at night, put in your orders at night, have the robot take care of it for you throughout the day, come back the next day and see what happened. The amount of time that you need to devote to it shrinks insanely. For me, I enter all of my swing trades and I exit all of my swing trades in the last hour of the day. So I can do whatever I want through the rest of the day, come in and focus for that period of time. The emotional thing, again, you're trading more frequently and you're generally trading a lot more during market hours. So there is that aspect, but at the same time, I don't feel a rush to get into or out of positions because, again, they can take days or weeks to mature. If I don't nail the exact entry point, that's fine. So it gives you that kind of levity when it comes to trading. You're not as insanely focused on what it is that you're trying to do. You have pretty good time to compound your account, and you have pretty good time to actually increase those reps when it comes to your trading as well. So the beauty I like about swing trading is that if you don't pigeonhole yourself into day trading and you don't pigeonhole yourself into investing and you start with swing trading, what can happen is something that starts out as a swing trade, say you buy a stock at 10, a few days later it's 11 or 12, you sell most of the position, you can keep some and that can become an investment. Or if you buy a position and it immediately turns against you, you can get out that day. So it kind of gives you the best of both worlds as well. So now that you know the pros and the cons of all of these, the question is what is best for you? So I obviously can't tell you that. I think the things that you need to consider are your job, the time zone, and account size, especially for US citizens. So your account size, if you're under $25,000, you can't day trade, right? You can't unless you join a prop firm, or there may be some ways around it. I'm Canadian, so I don't know all of them, but you're basically pigeonholed into one of the others. The other thing is your job, and when I say job, it's not just job, but also your personal existence. If you're somebody who is able to, say you meet the account size minimums, we'll assume that for the rest of the conversation, and you're somebody who can sit there and watch trading all day long, you have another job that you can schedule your own meetings around or something that gives you the time to focus when you need to focus, day trading may be a good thing for you. When it comes to your time zone, right? If you're on the West Coast, whereas I'm on the East Coast, if you're on the West Coast, you just have to get up really early. And if that's something that you're okay with, then again, for focusing on that first hour of the day may be for you. If you're on the other end and say you're, getting off work at the same time the market's about to close or is closing, then maybe swing trading would be the thing for you, where you can enter your swing trades when you're done work. You can, put out your stop losses, put out your profit targets, go to work the next day and know that the next evening that you'll check as well. And then also, what is just your general lifestyle? Trading should first become some sort of side hustle. I don't really like that term, but some sort of side adventure. Unless you have an incredible account size already and you're incredibly confident with what you're doing, you shouldn't just leave what you're doing and then start trading, right? You should start out somewhere else where, the bills are paid and there's a roof overhead and everything's secured. And then you should transition into something like this when it comes to dealing with the other side. Maybe when your trading income increases, your work, you end up doing less of, becoming a contractor, something like that. But those are the things you need to consider is how long do you have to do this? If you only have a few hours a week, then you pretty much have to pick the investing side of things, where you spend that few hours a week researching what it is that you're interested in, having a robot, again, something like Trade Ideas, pull the trigger for you. If you're, again, hyper focused on it, then you may want to consider day trading. Now, on top of time zone, job, and everything, you have to look at yourself a little bit personally, where you have to say, okay, something that I am really good at is making plans, coming up with strategies, researching, this type of thing. But I find myself to be a really emotional person. That kind of person, day trading would be out. If you're someone who you're really good with on-the-fly thinking, but longer term kind of strategy development and thinking isn't your forte, then maybe day trading would be good. So look at your external factors and then also look at your internal factors and trying to figure out what it is. Now, the last thing that I will say, this is just something that I think every trader knows, but I just kind of want to harp on a bit, is don't move from one to the other too frequently. Master one time frame, become profitable in one time frame, and then move to the other. Don't say I'm going to day trade one day and then that didn't work for a week and now I'm going to try swing trading and that didn't work for a week and then I'm going to try investing, right? They're different styles or different techniques. They take different skill sets. So you just need to make sure that you're in the right camp when it comes to that. And lastly, don't let a day trade turn into a swing trade, turn into an investment just because you're losing on it. That's way more common than people think. Make sure that if it's an investment, you have a trigger and a stop loss. The same way if it's a swing trade, you have a trigger and a stop loss. And if it's a day trade, you have a trigger and a stop loss. I mentor traders. I have a trading room, which you can check out on my website, link in the description below if you're interested. But there's so much more of this. I am going to buy XYZ company that is down 80-90% because I think it's going to be a good investment and I'm not going to have an out. I'm just going to buy it and I'm going to hold it. Don't let I'm an investor be an excuse for holding shitty stocks. If it's not going up, it's a shitty stock. So I just wanted to leave everyone with that. Again, thank you all for coming. If you'd like more of this content, comment down below. Let me know what it is that you like. I very much drive what I do next on this channel based off of the feedback I get. And until I talk to you guys next, trade safe.